we got that day. So we took the 202 puts on the 24th of June at the open. And when I took a screenshot of the 202 puts on the 24th of June at the open, you'll see the price I paid for them. So this is not the price I paid. This is not the price I paid. That was the price I paid for the 1 day. This was the price I paid for the 2 day. And this was the price I paid for the 3 day, right? So that's the 3 days puts that I bought: 1 day, 2 days, and 3 days. Well, this is day 3. Expiry today, right? So when I paid 98 cents for that put, what I did to cover that was I sold the 203 calls, right? So I sold enough 203 calls to cover each of these options. So the option was effectively free. Obviously, I've got a lot of risk if the price goes above 203s, right? So if the price goes above 203, I've got a lot of potential risk, and I would have to hedge that by buying the Russell. Everybody happy with that? And if it goes above 203, my chances of making any money is pretty much zero. But obviously the idea is that this has got a storyline. We've got a storyline that we are wanting to take advantage of. So what happened, of course, is that we paid 39 cents for the 1 day option. And you can see that from the 202 to the expiry, we made 90 cents. So we made about 60 cents profit on that trade. But remember, we also got to collect and hold on to the 40-cent premium. So we made over $1 on that trade, right? Over $1 on that trade. On the second trade, 74 cents. And obviously the 74 cents closed yesterday at 200.5. So we made $1.50 on that trade. And then the final trade, we paid 98 cents, and the current pricing is 238 cents. That's a pretty good return, isn't it? Now, I know you're not going to execute with 100% of your exposure, but still, nonetheless, that is a very, very good trade, considering that 98 cents was covered by 5 of these. Then, of course, that 238 is now all clear profit. I'm making $2.38 or $238 per IWM option trade. Now, you don't have to sell the calls if that's a problem for your broker. You don't have to sell the calls. You can leave that part out, in which case, obviously, you're still making approximately $1.40 on the deal. Approximately $1.40. So what is the trade? Well, we told you what the trade is before. We look at the cash open and we look at the cash close. And it's either 1, 2, and 3 or 2, 3, and 4. So you can see that we get 1, 2, 3, 4, and 5 at the cash open here. So we get the sell in after the first hour. Remember, after the first hour. And obviously that was our trade from a couple of days ago. And then we get the next day, we can see again, we get 1, 2, 3, 4. And then we followed that up with 5. We sold it again. And obviously this is the 3 days. So we got 1 day. This is the 2 day expiry. The 3 day expiry is today, but obviously you've got the choice to cash in yourself. At some stage, you've got your chance to cash in yourself. So it's been a brilliant, again, another brilliant day on the Russell. We told you this actually on the 20th. We told you about the short sale, but it was a different short sale.